Yo, welcome back. All right, we're here, episode 29. So, this episode, I've been playing around with AI a lot between work and personal life. So, I wanted to really make this episode on how I'm using AI and how I built an agent to assist me with my financial decisions and being essentially a financial advisor to me. Now, there's a lot of warnings, a lot of risk that goes into having an agent being your financial advisor. So I built the agent specifically how I would invest and what I see when it comes to long-term investing. This is not a betting game. This is not a quick or get rich quick scheme. Like there's none of that. This is truly an investor agent that can educate me, give me guidance, and help me make decisions. At the end of the day, I'm responsible for my own money, so I need to make sure that I'm making the best decision possible. And by having this agent assist me with that, it pulls from the most credible sources, it gives me the most data, and then it gives me a history of what typically happens with the data and what to expect. So, of course, we can't predict the future, but having an understanding of the history is very important. And, I still do my research. I still have to do my research, which I'll go over later in the video. But before we kick it off, of course, you gotta start with the intro. For you who don't know, if you follow the Big Three league that Ice Cube created, Ice Cube is actually set to make the Big Three go public. And that's actually going to be in Q4 of 2026, which is right around the corner. This will be the first ever publicly traded sports league in history, which is really, really insane. Honestly, when he started the Big Three, I thought it was going to be more one of those leagues that kind of comes and goes. But man, Ice Cube really put his stamp down. He evolved it over the past couple of years. And, it's just one of those leagues where now he's able to launch an IPO for it, which is actually insane. So the ticker is going to be TONT. So, and it looks like its estimated company valuation would be at $290 million at the launch, which is pretty good for a sports league essentially. Like they don't have there's not like an AI race, isn't medical, anything of that nature. It's not defense, isn't gold. It's a publicly traded sports league. So it coming in at $290 million open at IPO, it's pretty good. Now, as you guys all know, if you follow this channel, this is a very exciting news for those who, are in sports who may want to get into investing and be like, okay, this may be my way in. Pause, because we don't invest into IPOs the first 90 days. We don't do that. It's too volatile. You see it with SpaceX. I called it. You go check on one of my last videos. I called that SpaceX will skyrocket because, of course, it's Elon's name attached to it. SpaceX has been around for years. And then what happened? It ended up plummeting, and now we're just back at the IPO launch levels. So that's the reason why I don't invest in IPOs, because I don't know the data behind the company. Like, we haven't had the initial reporting, and then once SpaceX got their initial reporting, then that's when you really saw this stock start to tank, because they're like, whoa, like they're not making as enough revenue as we thought for a $2 trillion valuation company. Well, duh, because they're still in their IPO launch, and duh, people who are inside SpaceX can now start selling their shares that they had pre-IPO to take profit. So this is the exact reason why I stay away until we get a couple quarterly reports come in. Now, this is really interesting to me because this is like one of those examples, buying the hype, right? Because again, like this is going to be the first ever sports league that's trading on the public market. And for a sports fan, again, who wants to get into the market, it's like, okay, this could be my way in. If I was getting into the market, what I would do is I would start with ETFs and index funds, right? So that's what I would do. I would start with ETFs and index funds. I'll tell you now, the big three isn't going to hit the S&P 500 when they go to launch, right? That's not how it works. So the big three is not going to hit the S&P 500, which shows that it won't be in that index. You need to build your base ground, which is index and ETFs, before building into individual stocks, unless the opportunity presents itself. So for example, I got about the same. I got more shares in NVIDIA do I do right now into VOO, into my personal trading account. But that's because I was buying NVIDIA at 97, 120, 110. Like I was buying it at really good prices, and now the stock is over $200 per share. So that's a little different because we had a major pullback. Early last year? I think it was April. So we had a major pullback, and that was a great buying opportunity. And I took advantage of it, and it's been working well. So, sometimes you got to flex your decision making just a little bit when an opportunity presents itself. But end of the day, the baseline is going to be VOO, VOO, VOO. So, you know, my question is not as a sports fan, but as an investor, right? My question is, you know, what is the demand for the company, right? Like how are investors going to look at the big three as an investment opportunity? How does economic data impact the big three and its stock price? Like how if the CPI comes back bad, we have rate hikes, we have, if they cut rates, if they stay even with rates, what does that do to a company like the big three, who is more into like entertainment and the sports, not into like an industry of like oil or defense or medicals or, you know, AI, tech, memory, storage. Like, so what my question is like, how does the economic data impact the big three? And how do you keep investors interested when it comes to innovation, right? So we know over time sports leagues may change X, Y, and Z, but when it comes to like the salary cap, TV deals, the whole 9 yards on the back end, but how does that impact investors' decision making on making a decision to buy and to grow the stock? Either way, I'm hyped for Ice Cube. I'm hyped for the big three. That's actually really it's amazing. It's an amazing feat to be the first ever sports league to ever launch at public IPO. So I think it's really cool, and we'll just see where it goes from there. All right, so now we're gonna go ahead. We're gonna kick off the video again. I'm gonna basically this one's gonna be a little bit long because I want to walk through my thought process and what I did to build this agent in order to help me make financial decisions. Disclaimer: the information provided on this podcast is for informational and entertainment purposes only. It should not be considered as financial advice. We are not licensed financial professionals, and any opinions shared are based on personal experiences and research. As always, do your own due diligence and consult with a certified financial advisor or professional before making any investment decisions. All right, so we all know AI can be scary, learning curve with AI, and of course, all the bad things we hear about AI. But we really rarely hear about the good of AI. The way I look at AI is the way, people looked at when the internet came. It was very scary. People lost jobs, but I wouldn't even be talking to you right now if we didn't have the internet, if we didn't go through, that Y2K era. Now, in '08, we did have a bubble pop, right? So the tech bubble, it popped, sent everything crashing. But here's the thing. If you look at the numbers between '08 and what the companies are, reporting now, they're night and day. You got people like SanDisk, you got people like Micron, you got people like Nvidia, you just saw Amazon, you just saw Microsoft just crush their earning reports, right? So these are companies that are making real money. So that's why I think it's a little different than the dot-com bubble. Now, are we in the AI bubble? Absolutely. Is it going to pop? Absolutely. It's just a matter of when. I just don't see it anytime soon, personally, just due to what these companies are doing and the amount of money that they're making. And we still haven't had OpenAI or Anthropic launch their IPOs yet either. So, there's still a lot of room of growth with AI, and that's the scary part. Like, if you're looking at what Microsoft just reported, looking at what Amazon just reported, their AI investment is really starting to pay off. And what investors do, right? They get nervous when, these companies are doing a lot of CapEx spending. And in my mind, as a long-term investor, I'm like, okay, well, they're doing a lot of CapEx spending now for the future. So if it does pay off, or when it pays off, because you're already seeing it in some of the data for these companies, all right, now you're taking off. Now it's a race. Now it's a race to see who can be number one. Nvidia is also obviously number one, and that's why they're going to be number one. They're here to stay. Their chips are just undefeated. And they already said like they have so much room to grow. So why not trust in Jensen, who really hasn't failed so far yet since the launch of NVIDIA going and switching over to an AI type of company. So, but back to my thought process. My thought process was when I was trying to look for a financial advisor is that I know coming next year that I want to take my finances to the next level because by this time next year, the plan is to have majority of my debt eliminated outside of my student loans, my truck, and my house. Everything else, I want to try to have cleared around this time next year. With that being said, what does that look like? Of course, putting more into the stock market, but I have kids I need to get invested with. I know that when it comes to retirement, it's going to be me and my wife. So I got to make sure that I have enough for me and my wife to enjoy retirement. I have other avenues I want to venture into, and I want to find a way to where I can keep making more money to try to retire at an earlier age, or maybe go part-time later on in my career to where I can just sunset into retirement. So what I needed was someone who can really sit down and, help me understand that. Now, in the same thing, like in the same breath, I do my own research, and I've been doing this for about 2.5 years plus now, going into, learning the game of finance. I still got a lot to learn, but I'm starting to really understand the basics of finance, which is really helping me. And that's why I wanted a financial advisor, just to, educate me, take me to the next level. When I was looking though, I said, man, like this can get pretty expensive at some point in time. So I said, instead of hiring someone, why not just build something, right? Why not just build something? So I got to research, I got to looking at YouTube videos, and I got to work. Again, like this is more, when I started doing my research, this is more of a long-term investment for both the agent and my finances. A very long-term investment. Yeah, I have a network and resources that I could use. But again, instead of hiring someone, I built someone, which led me to my financial advisor, but that I named L. And yes, L is L from Stranger Things because L really held that show down. So I need L to hold down my finances and make sure that I can take it to the next level. So later in this video, we'll go over what L can do, how L maps out my finances, a few prompts I'm gonna give you to get started if you are interested, and what I should focus on both short term and long term. Honestly, it's been a real amazing resource. I just haven't had enough time to, see the results. But again, I should start seeing results come this time next year, right? Because that's the roadmap that we have. So, I'm big on you got to spend money to make money. I'm spending $20 a month, $20 a month plus tax to get this done. And I'll show you what platform I'm using here. All right, so the platform I decided to build the agent on is Claude. So for those who know me, I use Copilot, I use Claude, I use ChatGPT, and I use Gemini. And I decided to go with two subscriptions that I'm going to pay for. One's going to be Claude, and one's going to be ChatGPT, both $20 a month. Why did I do that? Well, because I use it for multiple things. I use it for personal reasons, I use it for business, and yes, I do use it for this podcast. So whether that's caption writing, image creation, a quick, Google like question, I use ChatGPT for. For ChatGPT, I just kind of stuck with it. It was my first experience into a a chatbot, so it's easy on the eyes. I've used it for a while now, and I think personally for me, it's really good for image creation, which I need when it comes to painting a picture. People nowadays, they like visuals, they like images. And why not do that with ChatGPT? ChatGPT just does it on a much higher scale than Claude, but Claude is my favorite platform. It's not even close, by far my favorite platform, because it really fits what my needs are, and it's not even close. I use it for research, I use it for the business, I use it for deep critical thinking type of conversations. I go with Claude because it's by far the best and it gives you the best results. Claude is really great for business owners, entrepreneurs, coders, developers. I mean, we're literally talking about me building an agent. If I can build an agent that works, anyone can build an agent that works because it goes through Claude and goes through Claude Code. And I know there's people out there way more technical than me, and I know there's people out there smarter than me, and I know there's people out there that has a better grasp and understanding of AI than I ever will. But that doesn't mean you can't create something that works for you. It just takes time, a lot of research, a lot of trial and error, and a lot of time. I mean, we even use Claude to pick our fantasy draft order that we're going to have our draft in a month for by using the odds of the NBA lottery for the first overall pick based on how teams finished last year after the championship. So it was actually pretty cool. Now, that was just something quick that we did, but it worked. But it just shows you what Claude can do. Could ChatGPT do it? Absolutely. But again, when it comes to like the numbers and breaking things down, the data research, I just think Claude is 101. So 3 things that you will need to get started if you are going to be interested in building an agent. You need to install Claude on both your PC and phone. You need to pay the $20 per month, and then you got to download Visual Studio Code. Now, I can't go through a whole presentation to set up for this. That would take way too much time. If you are interested in learning how to build an agent for anything, but really finance, just go ahead, comment, and I can send you a couple YouTube links that got me started. Because once you get into it and the more that you practice with, it's just like anything. The more you practice with it, the easier it becomes. And at this point, it's just kind of like second nature. The biggest thing is learning how to prompt. That's the thing. The better your prompts are going to be, the better outcome is going to be. And I'll show you an example of what Claude has done. This is how I learned, by watching YouTube, listen to endless podcasts. I've been reading books, listen to audiobooks. These are things that you need to do. The more you put into it, the more you're going to get out of it. So let me tell you about agents, and let me tell you about the prompts. I've been hearing about agents for the past couple of months now, and what really got me into it is I said, let me test it for the business. Let me go ahead and just test it for the business. So I have agents for basically everything I do for the admin side for the business. And I can say, like, as a business owner, as a father, as someone who has a full-time 9 to 5, I really feel like I have way more free time. I can give back to my family, my friends, and my business by just having these agents help me with the heavy lifting. Now, I don't have my agents fully automated for just a few reasons. One, I still like to be in control. At the end of the day, it's my business, it's my product, it's my life. So whatever I put out, I have to be responsible for. So that's why, I still have it fully automated. I haven't fully automated it yet. And honestly, I still want to learn more. So as I continue to, learn more, grow the knowledge, then I will start automating everything a little bit more. But right now, when you have these agents, it takes time to build, because when you have these agents, you have to understand that you have to train it as if it is an agent, a real life person agent. Like, you got to train it as if it's a real life person. You can't just build an agent and not feed it, not give it feedback. Like, you have to train your agent to exactly what you want. So in the meantime, it's not about eliminating everything for me personally. It's not. It's about simplifying. It's about being more efficient. And I feel like I'm already starting to do a good job with that. I'm seeing the results. Just the last 28 days, our Facebook engagement was up over 300%. So it works. It does work. Is that leading to sales? No, not necessarily right now, but it's getting the outreach that we need, that we haven't had before. And there's more that goes into converting a sale more than just posting on the internet. Where I'm using AI to help me identify, those areas of opportunity. It relaunched my whole website by itself. It updated it. You go check it out, www.kaiswicksllc.com. It literally reloaded the whole website to make it more user friendly, because people were having issues going to the cart. So once I said that, it said, "Hey, here's the layout." Gave me the layout. I looked at it. I'm like, man, like, I would have never even thought of having a layout like that. And it's so simple. But again, like, I'm not an expert in building websites. I just do it because I just learned how to do it because it's free. I don't want to pay someone $300, $400, $500 to use a template to build a website. But okay, anyway, we are here to really talk about L. So here are some things that really got me started. So first, you want to create an SOP and a job description, and here's why. To me, you're replacing an agent with a financial advisor per se. So it's important that you get someone to fill the job. And I know it sounds crazy because it's like, Nick, you're talking about a robot. Yes, I understand. But having an SOP and a job description will keep the robot within that SOP and within that job description. So if you don't want it to make decisions for you, which you shouldn't have it make decisions for you, it needs to be in the SOP and job description. If you are a beginning investor, you need to put that in the job description in the SOP. If your risk tolerance isn't high, it may be moderate or low, you need to make sure you put that into the SOP and job description. So what I did was, no, I didn't create them. Absolutely not. I had Claude create them. I asked Claude, essentially, I want to start this agent, this personal finance agent. I want to create an SOP and a job description. I don't want it to go outside the SOP and job description. Help me get started, interview me, and ask me questions on how I would want my personal financial advisor to be. And then boom, Claude will start asking you, make sure you say, I want it multiple choice so you're not typing everything out. Claude will start asking you to verify certain things. And if it misses anything, then that's when you can say, hey, make sure you add this, make sure you add that. You know, make sure you understand my roadmap. Make sure you know this is like a 5-year, 10-year, long-term, short-term, whatever it is. Now let me make this very, very clear. L has very strict rules, like I mentioned, on how I personally invest, which means building long-term wealth. Keyword long-term. L isn't here telling me to put my money into meme coins. L isn't here telling me to put my money into Wendy's because Wendy's went up 11% just out of nowhere a couple weeks ago. Like, that's not the purpose of this. The purpose of L is to educate me and give me a deeper understanding of economics and finances. I can't tell you what to do with your money, but what I can tell you is you need to actually do your own research and pick up a book, because if not, you're going to get burned. You're going to get burned real quick. Again, I have very specific rules in place, and I will question L as if at the end of the day, if this is going to be the right decision. So what I decided to do is not only do my own research, I have L give me 3 options. So option A, B, and C. A being the most recommended, B being the second, and C being the third. Because it's my decision at the end of the day. I have to make sure I'm doing my research to get this decision. L just helps me with the research. L just helps me understand economics at a higher level, which then L helps me understand personal finance at a higher level, which then in turn will educate me in order to make a good decision. And you don't have to make a decision about stocks. You can do it simply just about budgeting, right? Start there. Start with the budget. None of this even matters if you don't have a budget. Start with your budget. So, okay, so after you have the SOP and job description downloaded, you want to watch on how to build a agent through VSC. So you need to go to YouTube and Google how to build a agent using Claude Code, and it will take you through every simple step of the way. And it's going to take time. I'm not going to sit here and tell you it's not going to take time. L took me about 3 weeks to build, and I'm still educating and updating L to this day. But the more information I put in, the better results I get, and I'm going to show you here in a little bit. So what I'm going to do now, I'm going to go ahead and I'm going to show you the 3 prompts that I used. All right, so I won't read all of this, but essentially this is going to give you an idea on how to get the agent started, right? So essentially what I did was I had it pull up the prompts I used to go ahead and get started. So as you can see, agent name, let's get started. First, read back my full profile from the job description and SOP, my income, take home, free cash flow, invested assets, and my complete debt schedule. So what this means is you got to feed it every single thing that you know and that you have. Again, you gotta do your research. Make sure you go ahead, you take all the information you need, all the information you can, feed it so that way you get the most and the best possible outcome. You should already know your finances. If you don't, sit down, go over the past 3 months of your finances, take all your bills, your mortgage, any assets you have, whatever it means. Your car is not an asset, so don't think your car is an asset because it's not, things of that nature, right? So what's really going to be important is right here. So when you pay for Claude code, or when you pay for Claude Pro, as you can see, I got the Pro version, it gives you access to all its models. So Fable 5, I wouldn't recommend. Opus 5 you can use, but again, these two burn out the most. I typically use, Opus 4.8, 4.7, or if I really need to take a deep dive, I use Opus 5, because then this will give you the best possible solution. So it will take it to a very, very deep thinking level. It may take a little bit to generate your response, but when it comes to finances, I'm okay with that. So Fable 5 is one of the new models that they released, but as you can see, it requires usage and credits. I don't recommend that right now, because that $20 won't be $20 once you get your next bill. So anyway, so we're here now. Again, agent, we already talked about getting is all information income. All right, so then what we're going to do, one through 3, we're going to have it run it through here. From here, treat my profile as a living document. Anytime I report changes and updates and resequence. Again, this is going to get it started, and then you're going to have to continue feeding it over time on exactly what you want. What I wanted is, I really wanted something to help me invest, something to help me understand, certain accounts. Like, what do I need to invest in my account? Is Trump account really worth it? And it came back to say, yeah, you should everyone should sign up for a Trump account. It's a free $1,000, but be mindful, because every dollar you put into that Trump account doesn't necessarily mean that it's going to benefit your kid. And here's why. And once Claude broke it down to me, I already had a feeling of this, but once Claude broke it down to me, it made sense. The reason is, you could put all this money into this Trump account. At 18, it transfers to your child. You don't know what habits your child is going to have at 18. So let's just say you put in the maximum every year. Your child withdraws early, 10% penalty on top of taxes, and not capital gain taxes either. Like, it's going to be treated as income tax. That right there will eliminate years worth of investment you put into this Trump account that your child can just take out. And your child might get a hefty tax bill that they don't know how to deal with, and it sets them back. Maxing it out every year compared to just $1,000. The $1,000 is a lower risk. There's other avenues like a 529 or UGMA account, which Claude or L helped me identify. So again, this is really just to go ahead and get started with the agent. Now, what I did was I prompted it more over time, and I'll give you an example of what my prompts led to. All right. Now, thinking about this, I really haven't done a video like this in a very long time, and it's actually kind of exciting because it's really showing you the power that this agent has, and it's actually kind of crazy, and I'm glad that I'm here to share it with you all today. Now, it's more in depth to what I'm sharing with you right now, but the reason is because personal finance is personal. My situation may be completely different than yours, but you can still get similar results. So here we have the Thompson couple, and it goes over their financial situation, right? So this here will be a couple pages that we're going to go and review. I won't take too much time on it, but it just shows you the power that this agent has. And it even says prepared by L. It's a demo document, but L sends me a weekly report on what happens in the market. So every Friday at closing, it's scheduled to send me a report. Does a really good job. It sends me a report on any major economic data release, like the jobs report, or it sends me information on the CPI report, and it breaks it down. So it's basically saying this is what happened. It gives me the underlying numbers. When you're looking at these job reports, you look at CPI, you can't just look at the number, right? You can't just look at an employment rate. You have to look deeper into a number, and L does that, and it gives me information from reliable sources. Only pulls from top resources. L doesn't pull from anything else. L doesn't pull from Reddit, doesn't pull from Wikipedia, doesn't pull from Facebook. No, L pulls from Yahoo Finance. L will pull from Bloomberg. L will pull from Fidelity, Vanguard. Like the well-known, it will pull from the U.S. Census Bureau. Like, it doesn't pull from just random sites. L is specifically pulled from resources that allow me to make sure I'm getting the most accurate information. Now let's go over this. All right, so we got the Thompson couples. All right, so as you can see here, both about 34 to 32, make really good money, right? So they're over the U.S. average. Retirement accounts, they're starting to get their retirement accounts up. All right, so they are married. They file jointly. I mean, so combination, they combine 145K a year. Take home is between 8,420. They have 2 kids. It's funny because, I never even fed AI the name of my sister and then pulled the name of my sister. So maybe I should go play the lottery. Home, so they're renting 2 bedroom, you know, $1,850 a month. They want to buy a home within 18 to 24 months. They have 3,200 saved. What goal is 15K for emergency expenses. That's their goal. Total invested retirement only, so they don't have a traditional, tax brokerage account. 71K. Total debt, they got 64K, belt 65K, and net worth they're at $9,400. Now, a lot of this is because they don't have a home, so you got to keep that in mind too. So where does every dollar go? So L actually laid down a budget for them. Hey, this is, and as you can see, it has notes and it also has the APY the on the loans that they take out or credit cards that take out. This is important. So it goes over basically what your fixed expenses are. Now, it has daycare, which I actually love because, as you know, daycare is very normal for many Americans. And the one thing I don't like, I just like bringing up the utilities into the actual set days. Same with the subscriptions. I just like breaking those up to where the due date actually is. So that's something that I would feed back to L. Like, hey, this is great. The only thing I see right now so far is I would just, like to give you the due dates and have you list out the separate due dates for electric, water, internet, any streaming services I have in a gym. And then they also have term life insurance. Now, it breaks down their debt, which I like as well. So right now, it looks like they're going to follow the avalanche approach. So basically, snowball, you start with the balance. Avalanche, you start with the interest rate. That's really the biggest difference. And it goes basically what they spend. So, they, as you see, about 9% goes into groceries, which sounds about right. They got gas and transportation, entertainment, and dining, because, you want to at least try to do something. You have your kids, a household, any personal stuff like toiletry and stuff like that, down payment funds. So again, they want to get a house and then a buffer. And it breaks down that this is going to be 32.8% of their total take-home pay. So again, this is 10 pages, so I won't go too far into it. Now it's going to give you the roadmap. It's going to give you your total debt, monthly towards debt, CC, which is credit card, interest saved, and debt-free target is going to be 2031. So again, 2031 sounds like a long time, but they're about to clear out almost $65,000 worth of debt by 2031. This is the roadmap that L is going to give, right? And it educates you as well. So it tells you why it's going to recommend you what it's going to recommend. So after the CCs are gone, that frees up $555 a month. So this is what I was talking about in one of my videos when it comes to credit card debt, is that it's not about just having a raise. It's about paying things off. I mean, you get $555 a month. That's probably more than any raise that you'll get throughout the year. All right. So after that, the Thompsons will be able to deploy $1,455 towards their monthly goal, which is 3 times their current rate. All right, so now obviously emergency fund, they're going to turbocharge that, right? And they'll be able to reach that, reach the 12K by November, which is, again, it's one of those things where it's kind of crazy that L can list this all out, and L is going to be very factual because I told L, I want your educational experience to be as if you're a top student at the top financial schools in America. And I want you to act as if you are a vet into the industry of 10-year plus experience with this. Now, things do happen. Life will happen. We get that, right? So we understand that. And this is why I told L, whenever I update you, I need you to update your profile and I need you to give me a new updated situation because things will change. Life will happen. That's part of finances. But that's why L is here, because L will 110% update you and give you a new path. I know that because I've been doing it myself the past couple of weeks. All right. So investment strategy. So now it gives you, of course, a retirement account. So one thing I didn't do with L is taxes, because I do want a real person look at my taxes. The only reason why is because I'm not as educated in taxes than I am when it comes to like personal finance, as in budgeting or, trying to pick VOO as an index to invest into, when to buy in. Like, I feel like I'm more comfortable, more educated in that than I am with taxes. So that's why I essentially want to have someone look over my taxes until I can get the knowledge to build an agent to help me with my taxes. Again, all hypothetical at the end of the day. If you don't follow it, then that's on you, and it defeats the purpose of creating it. All right, so retirement accounts, it goes over to retirement accounts. It goes over that no IRA is funded, and of course, there's no individual investment account. So, recommended adjustment, it gives that Derek increases 401k to 10%, so that way it captures the full match. I mean, 10% match would be fantastic. But essentially, what it's going to do, you're going to implement this after paying off your credit cards. So you're already investing, but now you just need to get the match, but you need to ensure that you're paying off your credit cards first. They want Camille to hold the 6%, which is the fully match capture, so she's gaining every earned dollar outside of that. The Roth IRA funding, and it goes over projected growth at an 8% rate. The reason why I went 8% rate, because it's a very common rate, right? It's a common rate to practice with. You want to try to lowball because you don't want to over exceed your expectations. If someone's trying to give you an 18% rate, run. 10% max is probably what I would do if it's going to be in anything I'm projecting long term, because that's the average rate of return for VOO. And what I love, it gives you the financial plan for your kids, right? Because a lot of people think that they have to get their kids taken care of first. No, you need to get yourself taken care of first, so that way you have more money to go into your kids. And remember, if you're investing into your kids, not only are you putting your money in, you're putting tax-free growth money in there that earns compounding interest. So like, you'll make the time up. And at the end of the day, it's better to start in what we started from, right? So it goes over the UGMA accounts, which I mentioned early in the video. One thing I want to do with my kids, educate you. Again, it educates you, which is what I wanted. UGMA accounts transfer to the child at the age of majority 18 or 21, depending on the state. Boom. Now I'm like, okay, well, I want to look into UGMA accounts. Now I can go to Google, I can use Claude, and I can look up, tell me more about UGMA accounts, right? So again, it has 529 here, it has the UGMA account here, and then it has how much monthly, annually, which is going to be 2% approximately of the take-home pay. Again, like, it's a real powerful tool. It has insurance protection, so of course insurance is going to be a big part of that. So it's going to go over any insurance umbrella that you need. Again, I'm not going to go too far into that. I love the milestone tracker because it breaks up in phases. It has a complete your phase 1, pay off this card. Pay off this card. All right, after you got these done by August 27, now you're going to enter phase 2 by trying to get your emergency savings. You're going to go into phase 2 by trying to pay off that car. And then it takes you into phase 3 along with long-term goals in a wealth building mode, right? This is so powerful because you have to pay so much money for someone to do this when you can just build an agent to do it free for you. You're paying $20 a month, and I guarantee you that $20 a month will translate to so much money over time. You just have to be patient. And this is what I mean, network trajectory, right? So, all right, I'm paying $20 a month. All right, but when I'm 50, I will have almost $1 million in assets with $42,000 in debt. And I guarantee you most of this debt, again, mortgage only. So that's the big thing. As I mentioned earlier, you know, their network is only positive because they don't have a mortgage. But when they get the mortgage, it will go negative until, you know, it balances itself out. But you're approaching millionaire status at 50 to 48. You're spending $20 a month. It's not rocket science. What L does for you, L is a personal financial advisor that lives inside your conversation. Unlike a one-time financial plan that sits in a drawer, L is a living system that evolves with your life. The more you update it, the more you feed L, the more information we'll have that it can spit out and help you with this. Again, what I have here, weekly market recaps, as I mentioned, every Friday, economic data briefs, CPI, PPI, job reports, earnings and deep dives in the company that you own, quarterly financial recaps, has all of it. You know, I have, you know, recap me on the market in whole for quarter 3, right? So this is the things, and it does it automatically. Education and guidance, like, this is the things that I was talking about earlier in the video. Like, the way that L can be utilized to build wealth at a much cheaper pace is insane. Again, I've got a lot of value out of this right now. I'm just waiting for, my roadmap to end. So once I get through this roadmap by, I think I put it for March next year, I'll create another roadmap until the end of the year and another one, and I'll update it throughout the year, right? This is the power of building an agent. All right, so I showed you what the agent could do. I went through, I gave you my outlook that I have for myself, and you saw what the roadmap it can give you. No more excuses. If you really want to start making money, you really want to start getting out of the debt trap, it's not easy. It all starts here. It all starts here, right? So it's very mentally draining to do it by yourself. Why not have an agent help you with it? Guarantee you'll feel much better and you'll feel more confident. Confidence is key in anything you do. Even when we were in basketball, one of the biggest thing as a shooter is confidence. You have to have the confidence. You miss 10 in a row, you're going to shoot 10 more. Confident that they're going to start falling. Same principle applies when it comes to finance. Confidence. If this helps me with my confidence, it helps me understand more, I'm going to do it. So here's some advice that I have. Again, this is not a get rich quick scheme. Like, this is not what this is for. You saw what the purpose is for. You saw the educational purpose it has. I can't tell you to do with your money, like I said. One thing I can tell you is don't be stupid with it. Like, don't be stupid with it. And if you do need a true personal financial advisor, okay, then you go ahead and you get one. This is a resource. This is a tool. This is not an end of the road, he said, she said. So a lot of people do with AI. They'll take the first information they put in and they'll run with it. And they'll end up being wrong. If you don't believe me, why don't you look up the case study on the lawyer from the DOJ and how he got fired because he didn't overlook what AI said and he provided the judge with false information about the case. False accusations, false statements on the case. Look it up. It's actually wild. Again, took me a few weeks, almost a month basically to complete, and I'm still editing it up and down. Add the education level, add the certain criteria that you want into the SOP that you would want into a financial advisor. Make sure you only pull from top resource links. Give it a couple examples like I gave you, Fidelity, Vanguard, like the whole 9 yards. From there, check in. Just check in. But remember, it's informational and you need it to continue growing. So another thing is just mind dump in Visual Studio Code. It will tell you if it can do it or not. It'll tell you if it's a good idea or not. One thing I love about Claude compared to other chatbots, if Claude's like, hey, yo, like, that's dumb, it will tell you that's dumb in a very professional way, that you shouldn't do that. It's pretty dumb. And that's what I kind of like about it. But you want to mind dump. So think of, like I said, all this just came from me mind dumping into Visual Studio Code, just saying, hey, this is what I'm looking for. This is what I want. Cool, I like this. Well, what about this? Let's adjust this. Nice. Okay, well, let's adjust this. Like, it's going to take time, but I promise you, you saw the document yourself. You saw the document yourself. Put that work in, let it ride for you, build a budget system, start with your budget, get it under control, and then you can start going to do, other avenues and other adventures. But again, I hope you guys find value with this. I know this is a little longer video, but I just think it's really important because just the way the economy is going right now, it's one of those things where it's important that we need to, start actually worrying about our finances before it's too late. There's a reason why Trump keeps talking about the stock market and not about the Fed meeting minutes. There's a reason why they highlight the Dow. There's a reason why they highlight 401ks, because they understand that that's a really good talking point for the average American to think that the stock market is truly tied to the economy, and they tell two different stories. And why is that? Because most people who are invested in the stock market aren't common American people. You have a lot of people who are now recently starting investing, but the economic data impacts every American. The stock market impacts a select few Americans. Remember that. All right, I'm out. Thank you for sitting around watching the video. Don't forget to like, share, subscribe. It really helps the channel out. Again, I'm really just here hoping hoping the information is growing as my knowledge is growing. I feel way more comfortable sitting behind this mic and give you guys information. So again, thank you. I appreciate it. Have a good day.